Hello, and thank you for tuning in to the MacDesk Floor Report for Thursday, February 23rd. I'm Rebecca Darst from the MacDesk, speaking to you from the world-famous floor of the New York Stock Exchange, where we have already reversed a slightly higher open, but bounced off the lows, and we're now up 10 points in the Dow, so it's been quite a morning already. The futures came off their overnight highs after the release of the German IFO number. This is an index based on a survey of 7,000 German executives, and it is a widely traded indicator of prevailing business sentiment in that country. This came in much better than expected, posting a fourth consecutive monthly gain and the highest reading since last July. This lent some strength to the euro and sent the euro-dollar currency cross briefly above its 100-day moving average above the 133 level, and sent commodity prices sharply higher as well. But euro-dollar came sharply off the highs, however, after spokesman for the European Commission backed off from a prior growth forecast of half a percentage point for 2012 in the eurozone and revised their forecast to reflect a slight economic contraction. The Commission's report seemed to underscore the growing economic bifurcation taking place throughout the region. On a country-by-country basis, the Commission's forecasters are looking for a contraction of 4.4% in Greece, 3.3% in Portugal, 1.3% in Italy, and 1% in France, with marginal economic declines in Belgium, the Netherlands, Cyprus, and Slovenia, but with resilience in the dominant German and French economies, limiting the overall economic decline to 0.3%. So this dampened the sentiment somewhat, and not even an inline weekly jobless claims number on these shores could really shake the futures out of that early morning lull. Those jobless claims numbers for last week, by the way, came in unchanged week over week, although the continuing claims number declined from 3.4 million to 3.39 million rather. Just to revisit what we mentioned in our last report, these claims numbers are continuing to hover at four-year lows. Earnings reports were mixed, but overall not a huge market mover today. So looking across asset classes, we're seeing a lot of strength in the metals complex, and in the options market, this is carrying over into bullish activity in the iShares Silver Trust. This is ticker SLV. The fund is trading higher at 33.73, and we've already seen an aggressive block size buyer of June calls looking for a break past 37.20 by mid-year. Bear in mind, in SLV, we've got the 200-day moving average just out of reach at 33.99, so call buyers are looking for this thing to blow to the upside with a break of that level. VIX is up about 4% right now at 1892, and that volatility bullish activity that we mentioned in yesterday's midday in April and August upside calls was added to the open interest this morning. So clearly there's a lot of caution circulating around the market today, as evidenced by the interest in VIX calls. For additional market insights, be sure to check your inbox at 1 p.m. for the midday. For now, that's it from me, Rebecca Darst, for the MacDesk Floor Report.